the institutions are still either trying to figure out what this thing is.
Yeah.
Right? I had a conversation with one of the biggest kind of financial asset management firms in the world yesterday, based out of the US. And they're like, they've even got a crypto division, but they're other kind of where they allocate the assets. They're like, we don't know how to deal with this. They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know. It's too volatile for us. But I think usually it's the first mover advantage in this. I don't overcomplicate a trade. Just do the trade. Buy Bitcoin. And don't do it via MicroStrategy's options. Because before you know it, you fuck up the whole thing. And that's been a great lesson to me. And we all know them. There's a whole bunch of guys who love structuring complicated positions.
Yeah.
Those guys never make money. They never make money. They sound really smart. They never make money.
Macro liquidity is the primary engine at the heart of Raoul Pal's large picture perspective. He believes it to be the most significant factor influencing asset prices, ranging from stocks to cryptocurrency. And he says the tide of liquidity is turning again. Signals are turning green, including down bond rates, expanding central bank balance sheets, and capital inflows into riskier assets. Raoul thinks that in addition to monetary relaxation, technology advancement and international cooperation may be driving a new cycle of exponential growth. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. Mm-hmm. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's a hell of a setup. I mean, the last Trump cycle in 2017, we had the same thing. The market corrected in the beginning, because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine. I've just come back from the Middle East. All of the sovereign wealth funds are now buying. Right, these are the largest pools of capital in the world. We're hearing it out of Saudi, out of Abu Dhabi, out of Qatar, and out of Bahrain. And why that's happening is because the US has become crypto-friendly. It's the green light. So the US will get some regulation through. There'll be a bit of a shit show and debating about it and the usual stuff, but they will get some regulation through, which is the clarity that all of the pension funds need. So they're waiting as well. So there is a lot of buying to come from the really big players who've been waiting. Like Goldman has not been able to fully build out its desk, and JP Morgan haven't. They've had crypto for a while, but only for certain types of customers. But they want to build out suites of product, but they've been waiting for regulatory clarity. So yeah, I think it's a big deal, actually. I really do. There is a set of dominoes that happen in markets. Financial conditions lead everything. For financial conditions, we use the dollar, rates, and oil, right? The three big financial conditions thing. What we found is that leads like the ISM and other stuff by about 9 months. And it leads liquidity by about 6 months, something like that. Liquidity is what drives Bitcoin and NASDAQ, and it leads it by 3 months. So global M2, let's say, leads Bitcoin by about 3 months. I found out, I was like, what's going on with gold? I put it against against financial conditions. It reacts in real time to financial conditions.
Wow.
I'm like, holy shit, why didn't I figure this out before?
Of all trading securities, right?
Of all the things, well, because it's a pure currency asset, right? It's the pure thing. And so the moment financial conditions ease, gold moves. And so it's leading everything else. Which is, we were kind of thinking, is it leading or is it doing something weird? Is it trying to price in some catastrophic risk? No, it was just pricing in the fall in the dollar, the fall, rates didn't really fall a great deal, but the fall in oil. That's what the financial conditions are in the end. Yeah. It's the debasement of currency. It's the whole thing is the debasement of currency by excess liquidity being pumped into markets by any mechanism possible. At first, they used the balance sheet. Then we all figured that out and called that money printing. So then they did this Fed net liquidity trick, which was the balance sheet plus the Treasury general account and the reverse repo. Yeah. Then we figured that out. And then they moved to total global liquidity, which is including M2, which is stuff it on the banks' balance sheets. So force the banks to buy bonds. The institutions are still either trying to figure out what this thing is. Yeah. Right? I had a conversation with one of the biggest kind of financial asset management firms in the world yesterday, based out of the US. And they're like, they've even got a crypto division, but they're other kind of where they allocate the assets. They're like, we don't know how to deal with this. So they're still trying to figure out what it is. Yeah. Like they haven't figured out it's a macro asset. Others have. The sovereign wealth funds obviously are just doing it for diversification of reserves. They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know, it's too volatile for us. But I think usually it's the first mover advantage in this.
Raoul Pal thinks markets may soon go vertical as geopolitical threats diminish and liquidity returns to the system. Meanwhile, against the predictions of many mainstream pundits, inflation is still declining. Pal claims that the inflation hawks have been mistaken for the past 18 months and that they will be mistaken once more. He also draws attention to a significant event, Scott Bessent's nomination as Treasury Secretary. Bessent is not an academic in contrast to most officials. Raoul has known him for over 20 years, and he is an experienced investor and former manager of the Soros Fund. According to Pal, Bessent is one of the few people who actually comprehends how global macro functions from a market standpoint. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Saylor keeps going, it's going to push this out to others. And it's the others who are likely to blow up because, Millennium, they kind of know how to run their risk. Yeah. But it's so I'm always nervous of seeing leverage build up in a 70 vol asset. That is my rule of thumb is leverage in a 70 vol asset is going to nuke everybody at some point. Simple rule of thumb. I don't overcomplicate a trade. Just do the trade. Buy Bitcoin. And don't do it via MicroStrategy's options because before you know it, you fuck up the whole thing. And that's been a great lesson to me. And we all know them. There's a whole bunch of guys who love structuring complicated positions. Yeah. Those guys never make money. They never make money. They sound really smart. They never make money. That's right. But I do think that he's going to have to go back and fix the bond market for the reasons being. He's a macro guy. He can see, like us, that the bond market is not functioning the way that it should do. He will have some insights from that, from the Treasury themselves to figure out, okay, what is it that we need to do? And don't forget, when he came in, he said very clearly, I have three things I need to do. Lower the dollar, lower rates, lower oil. Those are the financial conditions of global GMI financial conditions. He's saying, I'm going to lower financial conditions. Nobody listens. Yep. He's telling you we're going to have a rip-roaring rally. Gold takes off based on exactly what he's saying. The only one he hasn't managed to achieve is rates yet. Yeah. So he will come back and sort that one out, I think. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine, and let's assume that the Chinese will come to the table, do something reasonable. Those three things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow off kind of next 9 months or so. I don't understand bonds anymore because they're not working according to the business cycle. They're not working according to the oil price. They're not working according to inflation. And it's not like that all of the auctions are failing. So it's not like it's a lack of buyers. So I don't really understand what is going on. It feels to me that liquidity is not in the bond market and they need to do this SLR thing, which is basically allowing the primary dealers to warehouse more bonds.
Right.
So it needs, I think it's a liquidity issue, a plumbing issue, because, They should be much lower. Look at inflation came out this morning, 2.3%.
Exactly.
Yet 2-year yields are like almost 4%. It's like, this is stupid. It's kind of like, are we having to ignore bonds here? Which is a weird thing for us, because we used to always check what bonds were doing to figure out whatever all other assets were doing. And I'm actually just focused using the dollar instead as like our key indicator, because that seems to be a better measure than bonds are right now. But there again, Bessent and a few others came out immediately and said, oh, we've got tools to deal with the bond market. And they're telling you the big left tail risk that everybody fears of rates spiking up to 6% because everybody's dumping bonds is never going to happen.
Such a great point, Raoul. And how comforting is it to you to have a guy that lived his career at the Quantum Fund in charge of the Treasury rather than a lifetime academic? Can you just riff on that for a moment?
So I've known Scott for 20 years, maybe longer.
Brilliant.
So I remember going to see him at Soros in London when I was at Goldman. So I've known him since, I guess, 1996, 7, whatever it was.
Wow.
He was a Global Macro Investor subscriber for a long time. He came to my house in Spain. So cool. I've known him for a long time. I've not been in touch with him for a few years now. Last time I saw him was at Carl Bass's wedding. But Scott knows his shit. I don't think he was the world's best fund manager, but he knows how the world works.
Finally, Raoul Pal gives us some important takeaways that can help us define the next significant stage in financial markets. He thinks that one of the most important instruments for comprehending global macro is the bond market, which is currently broken. Yields are not responding to the business cycle, inflation, or oil prices. It is not a dearth of buyers because auctions are still going strong. Pal notes that the incoming Treasury Secretary, Scott Bessent, is uniquely qualified to deal with this. Bessent is a seasoned macro trader from the storied Soros Quantum Fund, not a professional professor like previous Treasury heads. He is someone who genuinely knows global financial institutions and the levers of macro policy, according to Raoul, who has known him personally for over 20 years. Raoul and perhaps the whole market are reassured by this, that steps will be taken to bring the bond market back into order. Looking ahead, the markets may be in for a strong rally if global concerns, such as those involving China, Iran, and Ukraine, subside. Conditions are setting up for what Pal refers to as a blow-off top rally in the upcoming 6 to 9 months, as inflation keeps down and concerns about rate hikes are probably exaggerated. Raoul has turned his attention to the US dollar as the most accurate measure of liquidity in a world where bonds are no longer the trustworthy signal they once were. He also sees the dollar's downward trend as another indication that riskier assets like gold, cryptocurrency, and stocks might be ready to take off. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.